Unit 1. Brokerage. The business of bringing together people who are interested in making a real estate transaction is brokerage. Typically, the broker acts as an agent of the buyer or the seller, or both, in negotiating the sale, purchase, or rental of property. A sales agent is a license holder employed by or associated with the broker who conducts brokerage activities on behalf of the broker for a fee or commission. Residential brokerage involves the sale and purchase of a residential property. Other types of real estate brokerage, such as property management, apartment locating, commercial brokerage, and the sale of a farm and ranch property, require specialization and sometimes additional education and experience to maintain competency in that area. Despite the size and complexity of the real estate business, many people think it only consists of brokers and real estate salespersons. In reality, the real estate industry is much bigger than that and encompasses a wide variety of related disciplines interacting together. Basic knowledge of the real estate related disciplines helps to maintain a better understanding of the real estate business in general. Real estate related disciplines. Some real estate related disciplines, including appraising, lending, and financing, property inspection, property development, real estate counseling, real estate education, title insurance, and abstracting, urban planning, timeshare sales, petroleum landsmen and women, and easement and the right of registrants. Uses of real property. Just as there are many areas of specialization within the real estate industry, there are many different types of property in which to specialize. See Figure 1.1. Real estate generally can be classified as residential, commercial, industrial, agricultural, special purpose, mixed use. The market for each of these types of properties can be further subdivided into 1. The sales market, which involves the transfer of title, and 2. The rental market, which involves the space on a lease and lease basis. Although in theory, a real estate person or firm can perform all of the services and handle all 6 classes of property, this is rare, done except in small towns. Most real estate firms tend to specialize in one class to some degree, especially in urban areas. So real property includes residential, commercial, industrial, mixed uses, agricultural, special purpose. Education Standards Advisory Committee. The Texas legislature created the Education Standards Advisory Committee by amending the Texas Real Estate License Act in 2011. The mission of the ESAC is to regularly review and revise curriculum standards, course content requirements, and instructor certification requirements for qualifying and continuing education courses. The committee consists of 7 members who have been actively engaged in the practice of real estate for at least 5 years before appointment. 4 members who are either owners of the real estate schools that are accredited by Texas Real Estate Commission and provide qualifying or continuing education, or approved instructors, and 1 public member. The chair of the commission may also appoint a non-voting commission member liaison. At its first meeting, the ESAC developed a process for reviewing existing qualifying courses and textbooks, comparing courses material to the topics required by TRELA of each course, and creating a detailed list of subtopics, and with time periods ascribed to each subtopic. The committee began its review of qualifying course by first focusing on principles of real estate 1 and 2. The committee intensively surveyed a selection of textbooks on the principles of real estate, including this book, comparing the text to the topics areas required by TRELA for principles, and finally recommended a revised curriculum for the principles of real estate 1 and 2, consisting of 2 30-hour courses with very specific subject matter requirements. The Commission adopted the new curriculum requirement for Principles 1 and 2 in the rules. This edition of modern real estate practice in Texas incorporates all the required curriculum changes. Unit 5, which concerns fair housing laws, as substantially rewritten to comply with the new requirements. In addition, Unit 17 was added to provide an in-depth decision of real estate specializations. The ESAC has also recommended the Commission has adopted by rule new curriculum requirements for 30 hours in law of agency, promulgated contract forms, law of contracts, real estate brokerage, real estate finance, property management, and real estate marketing. The ESAC completed a review of qualifying course curriculum content and has begun investigating the possibility of creating a TREC certification process for specialization in areas such as property management. The ESAC continues to recommend rules changes to the Commission as necessary to improve the quality of real estate education in Texas. Real estate law. The purchase of real estate is an entirely different type of transaction from the purchase of personal property such as groceries, clothing, fuel, automobiles, or television sets. Although every type of sale transaction creates a change of ownership involving certain relatively simple legal problems, even the simplest of real estate transactions brings into a playbook of body of complex laws. Real estate brokers and sales agents must have broad understanding of law and how various law affects real estate activities. However, if legal questions or problems arise, the real estate practitioner must advise the parties to consult an attorney, preferably one who specializes in the real estate law. Sources of real estate law. Generally in the United States, 7 sources of law affect the ownership and transfer of real estate. These sources are a Constitution of the United States, laws passed by Congress, federal regulation adopted by the various agencies and commissions created by Congress, state constitutions, law passed by state legislators, ordinance passed by cities, towns, and other local governments, and court decisions. Because the Spanish, Mexican, and French flags are among the 6 flags over Texas, the laws of those countries are influenced the development of Texas legal principles. Texas has adopted the English common law for certain rules, such as riparian water rights, and has drawn heavily on Spanish law for doctrines such as community and separate property. The primary purpose of the U.S. Constitution and the individual state constitutions is to establish the rights of citizens and delineate the limits of governmental authority. For example, the 14th Amendment to the U.S. Constitution provides civil rights protections that serve as the basis for federal fair housing legislation. Homestead and community property laws derive from Texas Constitution. Laws passed by Congress and by state and local legislative bodies may establish specific provisions, or the simple may set standards of conduct and establish administrative enforcement agencies. Federal fair housing laws prohibiting discrimination are examples of laws passed by the U.S. Congress. The Texas Real Estate License Act, which regulates real estate professionals, is a state statute passed by a Texas legislator. Some laws may apply to a specific type of property. For example, some landlord-tenant laws differ from residential and commercial properties. Governmental agencies that enact rules and regulations range from the Federal Consumer Finance Protection Bureau to the Texas Real Estate Commission to local zoning boards. The regulations passed by these agencies are meant of implementing and enforcing legislative acts. They provide detailed information regarding the legal and illegal actions and practices. They designate penalties and violations, and they expand on the law and have the effect of law. Sources of real estate. The U.S. Constitution. To the left, we have federal laws passed by Congress, go down, regulations of federal commissions and agencies. To the right, we have state constitutions, state laws and regulations of state agencies, go down, local ordinances, and they both meet by court decisions, in parentheses, common law. Decisions handed down by federal, state, and municipal courts serve to clarify and interpret law and regulations and constitutional provisions. By applying and interpreting the laws in relation to a specific event, a court decision expands the meaning of the law, establishing a precedent that may be used as a standard in subsequent similar cases. However, the courts are not always bound by establishment precedent. Courts and jurisdiction or area of authority may not be bound by the decisions of the court and jurisdictions. Furthermore, a court with superior authority in its jurisdictions may, at its discretion, reverse the ruling of a lower court. Real estate ownership and transfer are affected by common law, which is the body of rules and principles founded on tradition and court decisions. It is derived mainly from practices developed in England, as it applies to the United States, dates back to practices in effect during the American Revolution. Some remedies provided under common law were considered harsh, and as the result, courts of equity evolved to provide relief on the basis of equitable principles. Although Texas do not have separate courts of law and equity, Texas judges are permitted to grant both legal and equitable remedies to ensure justice. Law affecting real estate practice. The general sources of law encompasses a number of specific areas that are important to the real estate practitioner. These include the law of contract, general property law, landlord-tenant law, the law of agency, which covers obligations of a broker to the person who engages his services, the real estate license law, and consumer protection law. All of these will be discussed in the next text. Federal laws: capital gain tax law, fair housing law, equal credit law, real estate settlement law. The purpose of real estate license law. Because real estate brokers and sales agents engage in the business of handling other people's real estate and money, they need to regulate their activities as long as it's been recognized. In an effort to protect the public from fraud, dishonesty, or incompetence in the buying and selling of real estate, all states, the District of Columbia, and all Canadian provinces have passed laws that require real estate brokers and real estate agents to be licensed. The first real estate license law was passed in California in 1919. State laws: contract law, general property law, landlord-tenant law, agency law, real estate license law, consumer protection law. Real estate license requirement in Texas. Real estate agents in Texas were first licensed through the Securities Division of the Secretary of State's office beginning in 1939 with passage of the Real Estate Dealers License Act. House Bill 17. 46th Legislature Regulation Session. In 1949, the Texas Legislature established the Texas Real Estate Commission. The Commission administers the Act, Senate Bill 28, 51st Legislature, Regular Session. The Act has been revised many times, most recently in 2015. The Act's name was changed to the Texas Real Estate License Act, TRELA, in 1955. The purpose of TRELA is to protect the public from regulation through regulation of real estate license holders, real estate inspectors, residential service companies, and entities offering timeshare interests. The Real Estate Commission is self-directed semi-independent state agency. 9-member commission is composed of 6 brokers and 3 public members appointed by the governor for 6 staggered terms. One of the brokers members serves as the chair and is appointed by the governor. The commission oversees the licensing and certification of the real estate agents and brokers, home inspectors, and right-of-way registrants. The registration of timeshare developments and home warranty companies, the accredited of pre-license and continuing education providers, and the approval of real estate courses and instructors. The Texas Appraiser Licensing and Certification Board, TALCB, is an independent 9-member board with the Texas Real Estate Commission that licenses real estate appraisers in Texas under state law and federal law. The combined mission of the state agency, as articulated on its website, is as follows. The agency exists to safeguard the public interest and protect consumers of real estate services in accord with the state and federal laws. The agency oversees a real estate brokerage, appraisal, inspection, home warranty, and timeshare interest providers. Through education, licensing, and regulation, the agency ensures that availability of qualified and ethical service providers, therefore facilitating economic growth and opportunity in Texas. Persons who deal only with their own property are not required to hold a real estate license. However, any person who, for comparison or the promise of compensation, lists or offers to list, sells or offers to sell, buy or offers to buy, negotiates or offers to negotiate, either directly or indirectly, for the purpose of bringing out the license, listing, sale, exchange, purpose, option to purchase, auction, rental, or leasing of real estate is required to hold a valid real estate broker's license. Exception to the licensing requirements include an attorney licensed in Texas, a person acting under duly authorized power of attorney to the conduct not more than 3 real estate transactions to a public official acting as his own official capacity. A licensed auctioneer conducting a real estate auction, so long as the auctioneer does not engage in other brokerage activity. A person acting under a court, under a will or trust, an employee of a builder or an owner, an on-site manager of an apartment complex, transactions involving the sale, lease, or transfer of mineral interests or ceremony lots, transactions involving the lease or management of a hotel or motel, and foreclosure transactions. Further, under the License Act, real estate brokerage does not include constructing, remodeling, or repairing a home, or other building, sponsoring, promoting, managing, or participating as a principal, partner, or financial manager of an investment in real estate, or entering into an obligation to pay another person that is secured by an interest of real property. A real estate license applicant must possess certain stated personal and educational qualifications and must pass an examination to prove adequate knowledge of the business. In addition, to qualify for license renewal and continue to business, the license holder must pay renewal fees, follow certain prescribed standards of business conduct, and meeting education requirements. Unit 4 thoroughly addresses the duties and responsibilities of real estate brokers and sales agents to clients and consumers by introducing the concept of real estate brokerage and the law of agency. Unit 7 provides an in-depth decision of the Texas Real Estate Act and rules of the Commission. These laws and regulation of the Texas Real Estate License Act and rule of the Commission. These laws and regulations provide this framework for obtaining and maintaining a real estate license, including a laundry list of prohibited practices such as negligence, misrepresentation, failing to disclose, and publishing misleading advertising. The License Act and rules of the include the procedures that must be followed for consumers to file disciplinary and complaints against license holders for violation of the License Act and the rules, and to file reimbursement from the Real Estate Recovery Trust account for unpaid judgments against a license holder. The Texas Real Estate Commission Licensing Act requires that the license examination be a scope of sufficient of the judgment of the commission to determine that a person is competent to act as a real estate broker or sales agent in a manner to protect the interests of the public. Unit 7 more fully describes the License Act and the required education and sponsorship standards. In practice, for a complete copy of Senate Bill 2212 SB 2212, the most recent legislation amending the Texas Real Estate Acts and others passed in legislation sessions since 1989, visit the Texas Legislators website, www.capitol.state.texas.us. Professional associations. Professional associations for various real estate specializations are listed in Figure 1.3. The organization include, among others, the Appraisal Institute, the National Association of Real Estate Brokers, the National Association of Realtors, the Texas Association of Real Estate Inspectors, the American Society of Home Inspectors, the Texas Land Title Association, and the Texas Real Estate Teacher Association. The members of the National Association of Real Estate Brokers, NARB, be known as Realists. The large real estate trade organization is the National Association of Realtors, NAR, founded in 1908. It serves members' interests by keeping them applied to developments in their field, publicizing the service of members, improving standards and practices, and recommending or taking positions on the public legislation and regulation affecting the operation of members and member forums. NAR, also known as National Association of Realtors, is also sponsors various affiliated institutes and societies that offer professional designations to brokers, sales agents, and often others who are completed with required courses in areas of special interest. Some of the NAR institutes and societies and their designations are listed in 1.4. In addition to the property designation, NAR offers several certifications, among them the At Home with Diversity certification, ePro certification for internet professionals, military relocation specialists, certified real estate team specialist, real estate professional assistant certification, resort and second home property specialist certification, and short sales and foreclosures resources certification. NAR is composed of state, regional, and local associations. Members must hold a real estate license, subscribe to a strict code of ethics, and are known as realtors. A registered trademark. The Texas Association of Realtors, TAR, is affiliated with NAR and works closely with local associations of realtors in developing the interests of individual realtors and the buying and selling public. Membership in NAR and TAR is voluntarily. Only NAR may be called realtors. Other agents are simply real estate license holders or agents. NAR has 2 internet sites, realtor.com or realtor.org. In practice, with more than 100,000 members, the Texas Association of Realtors, TAR, represents all aspects of real estate in Texas. For more information about Texas real estate, consult one of the following websites. Austin Board of Realtors is www.abor.com. Houston Association of Realtors is www.har.com. Metro Tex Association of Realtors, www.dfwrealestate.com. San Antonio Board of Realtors, www.sabre.com. Characteristics of real estate. Real estate possesses 7 basic characteristics that determine its value and affect its use: relative scarcity, improvements, permanence of investment, area preference, immobility, indestructibility, and non-homogeneity. These characteristics fall into 2 broad categories: economic and physical. The economic characteristics of land affect an investment's value. There are relative scarcity, improvements, permanence of investment, and area of preference. Relative scarcity. Although land as such is neither scarce nor rare, scarcity in an economic sense means that the total supply of land is fixed. Even though a considerable amount of land remains unused, land in given location or of a particularly quality is in the short supply in some areas, such as downtown Houston. Improvements. Construction of an improvement of one parcel of land can affect the value and use of particular parcel of land, as well as the neighboring tracts and whole communities. For example, the constitution of a steel plant or building of an economic reactor can directly influence a large area. An improvement can be new construction or modification, and it can influence other parcels favorably or unfavorably. Permanence of investment. The capital and labor used to build an improvement represent a large fixed investment. Although older buildings can be raised to make way for newer buildings, improvements such as drainage, electricity, water, and sewerage remain. The return on the investment is term and relatively stable and usually extends over what is called economic life of the improvement. Consequently, real estate investment and land use decisions must consider the usefulness of improvement 20 to 30 years to the future. Area preference. This economic characteristic, sometimes called situs, does not refer to particular geographic location, but rather to people's choice and preference for a given area. The unique quality of personal preference results in different values for similar units. Area preference is the reason that some residential purchase pay more for a corner lot than for a lot of the same size located in the middle of the block, and the other purchase might pay less. And performance and the most important economic characteristics of land. A river runs through Bedford Falls, dividing the town more or less in half. On the north side of the river, such as Northtown, houses sell for an average of $150,000. On the south side of the river, known as South Bank, identical houses sell for more than $200,000. The only difference that home buyers think the South Bank is a better looking neighborhood, even though no obvious difference exists between the two equally pleasant sides of town. Immobility. Land, which is the earth's surface, is immobile. Some of the substance of land are removable and its topography can be changed, but it's the geographic location of any given parcel of land can never be changed. The location is fixed. Because land is immobile, so you can read better. Because land is immobile, real estate markets tend to be the local in character. In addition, local governments are supported largely by property taxes on real estate. The fixed amount of land in a given area enables the local government to rely on a certain amount of annual revenue from tax properties. which in turn allows the government to make long-range plans based on the projected income. Indestructibility. Land is so indestructible, the present permanence of land, coupled with the long-term mature of improvements, tends to be stabilized investments in real estate. Of course, the fact that land is indestructible does not change the fact that the improvements on the land depreciate and can become obsolete, which can dramatically reduce the land's value. Because the land is indestructible, it cannot be depreciated and is not insurable. Non-homogeneity. No two parcels of lands are exactly the same. Although they may be substantially similar, all parcels differ geographically because each parcel has its own location and therefore its singular legal address, enabling, among others things, a seller's transfer of property or a lender's placing a lien to ensure loan repayment. This characteristic may also be called heterogeneity. Characteristics define land use. The various characteristics of a parcel of real estate affect its desirability for a specific use. Some specific physical and economic factors that affect land can use include contour and elevation of the parcel, known as topography, prevailing winds, transportation, public improvement, and availability of the nature's resources such as water. For example, hilly or heavily wooded land would need considerable work before it got used for industrial purpose, but it would ideally suited for residential use. Likewise, flatland located along a major highway can be undesirable for residential, but would be located in industrial, office, and commercial use. Real estate, the business of value. The economic and physical characteristics of real estate form the underlying basis for determination of value. Value can be defined as the amount of large goods or services considered to be a fair, suitable equivalent for something else. It also has been described as the present worth of the future benefits arising from the ownership of real property. Subjective value. A desk with an estimated cost of $30,000 reportedly sold for $1.3 million at the estate sale of Jacqueline Kennedy Onassis. Value is based on objective and subjective factors. For example, a house fitted with a marble entrance hall and hardwood floors would have a greater objective value than a house with only rough concrete floors. Subjective value, on the other hand, is affected by the relative worth an individual placed on a specific item. Thus, a house may be beautifully designed and constructed with an expensive material and still be of no value to someone who does not want to be in such home. A given parcel of real estate may have many different kinds of value at the same time. For example, market value, used to estimate selling price, appraised and taxable values used for property taxes, insured value, mortgage value, and depreciated value. Often value is not the same as price, nor is it the same as cost. Price is the amount of money ultimately paid for property. Cost is the capital outlay for land, labor, materials, and profits necessary to bring a property into existence. Supply and demand. A market is a place where goods can be sold and bought. A market may be a specific place or may be worldwide economic for moving goods and services around the globe. It either can case the function of the market is to provide a settling in which supply and demand can establish market value, making it advantageous for buyers and sellers to trade. The economic forces of supply and demand continually interact in the market to establish and maintain price levels. Essentially, when supply goes up, prices drop. As more sellers compete for buyers, when demand increases, prices rise as more buyer compare for the product. See Figure 1.5. When both supply and demand increase, real estate prices tend to remain stable. Although no one can accurately predict changes in real estate values, the understanding that causes prices to go up and down can be helpful to the real estate practitioner. Supply can be defined as the amount of goods offered for sale within the market and at a given price during a given time. To be part of the available supply, land must be readily adaptable to the desired purpose at the price the market will bear. Three more pages and we're done. If the market prices of homes in the area were high enough to absorb the cost of removing the rocks before construction, demand can be defined as the amount of goods consumers are willing and able to buy at a price during a given time period. In real estate, demand is based on the benefits that can be derived from using land for a specific purpose. For example, an investor who wants to buy a corner lot in a business district to construct an office building buys the land for the rental income it will generate. Factors affecting supply. A number of factors affect supply in the real estate market. Some of the major factors include the labor force, construction costs, and government control and financial policy. Labor force and construction costs. A shortage of skilled labor or build materials or a significant increase in the cost of labor or materials can decrease the amount of new construction. The impact of labor supply and price levels depend on the extent in which is higher in cost can be passed on to the buyer in the form of higher purchase price. Technological advances that result in less expensive materials and more efficient means by construction may counteract some prices increases. Government controls and financial policies. Government monetary policy can have a substantial impact on the real estate market. The Federal Reserve Board establishes a discount rate of interest for money and it lends to commercial banks that are rare as a direct impact on the interest rates the banks charge to borrowers. Obviously, interest rates charged to builders, homebuyers, and commercial property developers play a significant part in determining the supply of real estate available. Government agencies such as Federal Housing Administration, FHA, and Ginnie Mae, the Government National Mortgage Association, determine the terms and conditions under which money is available to lenders for mortgage loans. The Consumer Financial Protection Bureau, CFPB, was also created by Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. Dodd-Frank Act, signed into law on July 10, 2010. The Dodd-Frank Act transferred oversight to several federal consumer protection laws on the CFPB, such as the Real Estate Settlement Procedures Act, RESPA, the Homeownership and Equity Protection Act, HOEPA, and the Truth in Lending Act, TILA. And the agency was given broad authority to write rules to protect consumers from unfair or deceptive financial products and practices. Virtually any government action can have some effect on the real estate market. For instance, federal environmental regulations may increase to or decrease to the supply and value of the land in a local market. Local governments also influence supply. Land controls land use controls, body building codes, zoning ordinances, and taxation policies help shape the character of a community and control the use of land, and they can have either positive or negative effects. High taxes may deter investors. On the other hand, tax incentives or tax abatements can attract new business and industries by reducing the eliminating their properties. Increased employment and expanded residential real estate markets such could result from the new enterprises, encouraging developers into the increase the supply of houses and commercial properties. In practice, local governments are authorized to offer property tax abatements through September 1st, 2019, under the Texas Tax Code. Although tax entities authorize and consent to tax abatements, the task of attracting new business to a community is often the result of hard work by publicly funded local economic development foundations or organizations. Under the terms of many incentive or tax abatements agreements, a private firm may have to reimburse local governments or tax entities if does not meet agreed upon performance standards, such as number of jobs to be created. Factors that tend to affect the demand for real estate include population, demographics, and employment and wage levels. Population. Shelter is a basic human need. The demand for housing grows with the population and the housing needs grow. The demand for industrial and commercial areas also should increase, although the total population of the country continues to rise. The demand for real estate increases faster in some areas than in others. In some locations, however, growth has ceased to altogether or the population has declined. This may be due to economic changes such as plants closing, social concerns such as quality of schools or desire for more open space, or population changes such as shifts from colder climates to warmer climates. The result can be a drop in for real estate in one area and increased demand elsewhere. Demographics. The study of description of a population is demographics. The characteristics of the population in a community are major factors in the quantity and the type of housing in demand. Family size, the ratio of adults to children, the number of retirees, number of income, lifestyle, and the growth number of single parent and empty nester households are all demographic factors that contribute to the amount and the type of housing needed. In practice, the coming of age generation, Y millennials, echo boomers, the children of baby boomers, is expected to be one of the most important demographic trends to influence the real estate market over the next decade. Roughly 80 million children were born between 1982 and 1995, and either are or sooner will be renting their own apartment and buying their own homes. Employment and wage levels. Decisions about whether to buy or rent and how much to spend on housing are closely related to income. When job opportunities are plentiful, wages are competitive, and an employee feels secure in a job, demand for housing is likely to increase. When job opportunities are scarce or wage levels low, demand for real estate usually drops. The market might, in fact, be affected drastically by a single major employers moving and shutting down. Therefore, license holders must be aware of the business plan of local employees. Last page, stay strong. Cycles, business cycles, expansion growth, recession slowdown, depression the bottom, revival recovery. Over the next years, business activity as measured by the gross domestic product, GDP, has great ups and downs. These irregular fluctuations in activity are called business cycles. They are caused by both internal forces such as employment levels and consumer and investment spending, external forces such as wars, oil embargoes, and global economic forces. The boom, recession, contraction, general slowdown in economic activity, depression, the bottom or tough through the cycle, and revival, recovery, bringing the economy back to life after a depression and leading into a period of expansion. Movement within the cycle generally are gradual, but they can be very sudden. To analyze the patterns of business cycles, a number of trends can be considered simultaneously. The long-term trend, called the secular trend, tends to be smooth and continuous. It is most affected by the basic influence such as population growth, technical advances, capital accumulation, etc., etc. Within the overall problem, business cycles of various lengths. Various segments or industries within the economy may have shorter cycles with the different timing and different characteristics. Generally, residential real estate sales data reflect seasonal cycles with increases during the spring and summer months, influenced by climatic conditions, vacation patterns, school schedules, and similar factors. The real estate market is in local in nature and generally slow to adjust to changes in supply and demand. Because of the characteristics of non-homogeneity and immobility, the real estate market generally is slow to adjust to sudden variations in supply and demand. The product cannot be transferred to another market, so an oversupply usually causes prices to drop. Because there is considerable lag between the conception of real estate development and the completion of construction, increases in demand may not be met immediately. Additionally, the number of housing starts can lead the economy either into recession or out of a depression because the housing industry is very sensitive to changes in interest rates. A tight monetary policy during a period of expansion or inflation may drive the housing industry into a recession before affecting the rest of the economy. In contrast, an easy monetary policy, which results in lower rates, generally spurs consumer buying of residential real estate and may enable the home construction sector and lead the economy out of a recession. I will now read summary. The unique nature of land is apparent in both its economic and physical characteristics. The economic characteristics consist of scarcity, improvements, permanence of investment, and area preference. The physical characteristics are mobility, non-homogeneity, and indestructibility. The foundation of the real estate business is value, to which every real estate specialization relates directly to or indirectly. A property's value is the present worth of its future benefits. Values is not the same as price, which is determined in the marketplace. A marketplace is where goods and services can be bought and sold and relatively stable price levels established. The ideal market allows for a continual balancing of the forces in supply and demand. Because of its unique characteristics, real estate is relatively slow to adjust to forces of supply and demand. Supply can be defined as the goods available in the market for a given price. Demand is defined as the amount of goods that consumers are willing to buy at a given price. The supply of demand for real estate is affected by many factors, including population changes, demographics, wages, employment levels, and construction cost, availability of labor, and government monetary policy and controls. In the state's fluctuation, business activity are observed in cycles. Business cycles generally have 4 stages: expansion, recession, depression, and revival. Stages of the real estate cycle are similar to, but not necessarily coincide with, those in the overall business. although selling and leasing are the most widely recognized activities of these real estate business. This industry also involves many other services such as appraisal, apartment locating, property inspection, property development, counseling, property financing, education, title work, and urban planning. The highly complex and competitive nature of the real estate industry requires the practitioner to be competent in a number of fields. Real property can be classified according to its general use as residential, commercial, industrial, agricultural, mixed use, or special purpose. Although many brokers deal with more than one type of real property, they usually specialize to some degree. Even the simplest real estate transaction involves a complex body of laws in the United States. The 7 sources of laws are the U.S. Constitution, laws passed by Congress, federal regulation, state constitution, law passed by state legislature, local ordinance, and court decisions. Much of real property is based on common law practices developed in England. Common law includes rules and principles found on custom and prior court decisions. Spanish law also has influenced Texas real estate law. The Texas real estate law business is a dynamic industry that employs hundreds of thousands of professionals. Every state, the District of Columbia, and every Canadian province have some source of licensing requirement for real estate brokers and sales agents. The Texas Real Estate Agent Acts regulates the real estate in Texas. Various professional organizations afford the license holder an opportunity to stay current on real estate issues to real estate. Some of the organizations and national associations of realtors, the Texas Association of Realtors, Local Association of Realtors, and the National Association of Real Estate Brokers. That concludes Unit 1 of your real estate.